What's up, guys, and welcome back to my YouTube channel once again. So in today's video, I'm going to be doing something a little bit different, right? Because I found out that there are still people out here who are still struggling to understand this whole smart money concept, right? And so today I'm going to be sharing with you a systematic approach that I personally used in learning and mastering smart money concepts in less than a year. Okay, and I can assure you that if you should implement this strategy that I'm going to share with you in today's video, you are going to see immense growth in your trading career, right? So before we delve into today's video, if you are not subscribed to the channel, do well to hit that subscribe button and turn on post notifications, right? So that you don't miss out on other future important videos, right? So quickly, let us look at what we have for today. So I basically learned how to trade the forex market just like any other trader, right? Starting with some strategies like support and resistance, right? Where I was using support and resistance coupled with other strategies, okay? And I later moved on to learning how to trade chart patterns, okay? And that was somewhere in April 2019. And I got so good with trading chart patterns until a friend of mine showed me a screenshot where a trade was running about 1:50, and I think that screenshot was from a trader called RCV, right? And that was when I actually told myself that, hey, you know what? I want to learn this strategy. I want to understand why I was doing just 1:5s and whatnot with my strategy, and someone was doing 1:50, 1:100. I just wanted to understand that. And that was when I actually started trading smart money concept. So I began trading smart money concept in December 2020, right? That was when I started trading smart money concept. So this is just like an icing, right? So what I did was that, immediately I saw the smart money concept, I told myself that, you know what, this is what I want and this is what fits my personality. And so I will go every length to really understand what this strategy is about, what this whole smart money strategy is about, right? And so I decided to put in a lot of time, okay, to learn the smart money strategy, right? So the first thing that I did that made me better trading smart money was that I decided to focus on just one pair, okay, just one pair. And that pair was Euro USD, okay? So the reason why I chose Euro USD is that, there is actually an instrument called DXY, right? And that instrument tells the strength of the dollar, right? And Euro USD is just the inverse of the DXY, right? So I said to myself that, you know what, if I'm able to master Euro USD, I would indirectly master DXY, right? And if I'm able to master DSY, I'll be able to tell the direction on dollar pairs, right? And so that's why I chose Euro USD. And so that was the first thing that I did, that I chose just one pair, right? Another reason for choosing just one pair is that, I realized that every pair has its own characteristic, right? And so I just needed to take one and begin to learn, right? It is just like marrying a woman, right? You decide to date one woman, every woman has different characteristic, right? But when you stick to one woman, you're going to know what that woman likes, what that woman dislikes, and then you are going to, just live comfortably with that woman, right? Even though it's not going to be perfect all the time, right? But if you're able to learn the ins and outs, what the woman likes, what she does not like, you're gonna have like a happy relationship with that woman. And so that's one of the reasons for choosing to trade just one pair. Okay, great. So the second thing that I did was to learn how to read structure the right way. Okay, when I say learn how to restructure the right way, what I'm trying to say is that you should learn how to understand what the bigger picture is saying, right? You should learn to tell the bigger narrative, right? And also you should learn how to understand how the smaller time frame builds up and complements the bigger picture. Okay, so for instance, let me show you something here on Euro USD. Okay, so on Euro USD on the higher time frame, right, we can see that price is making what, lower highs, right, and lower lows, right? So price is in a downtrend. Okay, and we had this lower high that made a lower low, right? So we can see that this low over here got taken over here, right? So we had this low taking, and on a normal day, I would expect price to push to the supply zone up here. Why? Because first thing is because of structure. Secondly, I have liquidity built up and taken out with this wick over here, and so I am going to expect that retracement to the upside. Okay, so that would have been my anticipation for the bigger picture, right? But when I step onto the lower time frames, the intraday time frames, like let's say the 15-minute time frame, you're going to see something over here, right? So I was actually anticipating a retracement, right, to higher levels on the bigger time frame, right? And I didn't just wake up to anticipate a retracement, right? Everything I do, I wait for the market to tell me that it wants to do this, then I take that stand, right? So in here, I had the 15-minute telling me that it wanted to begin that retracement into this levels up here, right? So immediately I had this change of intent. I know that the retracement was ready. But then you can see that, the market closed on Friday somewhere here. And then immediately it opened. We can see that, the 15-minute was making higher highs and higher lows, right? And so I was expecting price to respect this demand zone and continue with a retracement. But then what I had was that instead of price respecting that demand zone, it's rather breached that demand zone. And there and then I realized that price is trying to tell me that it was not going to do the retracement again. So we can see that in here, I've been able to tell the intentions of the bigger time frame, but the 15 minutes or the lower time frame was basically telling me something else after it had earlier confirmed to me that it was going to go with what I had anticipated that it was going to happen on the bigger time frame. But earlier in the next trading week, the intentions changed, and because I am not the one who controls price, I just had to respect whatever price is saying and follow exactly what price is telling me on these time frames. Okay, so you need to learn how to understand these moves in the market. Take time, learn how to read market structure properly. Okay, so that's the second thing I did. And then the third thing I did was that I learned how to map demand and supply zones. Okay, it is very important. And one thing I'm going to say about this is that, if you learn how to read market structure the right way, if you're able to do the second tip that I give you the right way, that is reading market structure the right way, marking demand and supply zones wouldn't be a problem. Okay, because you know that, okay, the market is saying I have made a push to the upside, and so you're going to look for the origin or the block that made that push, right? The block that instigated that push, that zone, that POI, that candle, that IFC, whatever you call it, right? And that will be your point of focus. Okay, so for instance, in here we can see that we had a small block over here, right, that led to the break of structure. But then there was actually a supply zone over here. This was the last buy push, and that was actually what instigated this whole drop to the downside. And so this whole supply zone will be what you're going to look at, right? And you can see that that is exactly where price came into. Okay, yeah, so if you understand all these things, you can piece them out and then be taking good trades, right? So the next thing that I did, which was some kind of I don't know, it looked almost like a miracle, because understanding this fourth thing that I'm going to tell you right here helped me to avoid taking unnecessary losses It helped me to stay out of the market when I'm supposed to. It helped me to know that, hey, at this level, you just have to wait, right? You're not supposed to take this trade. And that thing is understanding liquidity and advanced liquidity concept. Okay. The reason why I'm trying to differentiate the two is that, normally when we talk about liquidity, we're looking at the common liquidity concepts, like maybe internal liquidity, double tops, triple tops, right? But when you're talking about advanced liquidity, we are talking of Asian highs and lows, the mid Asian ranges. We are talking about trendline liquidity, all those stuff are very, very essential to understand. You need to understand how they operate, right? The daily high, the daily low, the weekly high, the weekly lows. You need to understand them, right? So if I come in here, for instance, 15 minutes was making lower highs and lower lows, right? And this was actually my last H1 lower high that made this lower low, right? It is the smaller time frames that builds up to make the higher time frame, right? And so this whole leg was an H1 bearish push, but then within it we had 15 minutes moving inside, making lower highs and lower lows, right? And then we had the 1 hour breaking structure to the upside right here, right? And so this push phase of the H1 was actually also sharing the same structural level with the 15-minute time frame, right? And so I was aware that, okay, price needed to come to a demand zone right here. Then I can look for buys to the upside. That was my thoughts, okay? And so I even shared in my Telegram group, but I was looking at a zone in here on lower time frames. I don't want to go into lower time frames, right? So I was looking at a zone in here where price can come in, then I can look for the buys to the upside, right? But then that very day, I just saw something. If you look here, we can see that there was an Asian low over here, right? There was an Asian low, and so price quickly took out that Asian low, right? And I also understand that, the market always needs liquidity to move. So once I've seen liquidity taking, I knew that I was good to go. So quickly, I took my buys in here on lower time frames. Again, I'm not going to go into the entry, right? So I took up my buys. If I get a screenshot, I'm going to put it on the left side of the screen. And I was actually targeting this supply zone up here. And believe me, that buy that I took was like 1:10, 1:12, right? Just because I understand this liquidity concept with structure, with demand and supply zones, all these three things that I said earlier, right? So immediately I saw this liquidity zone taking, right? I just knew that I was good to go. And so I took the trade, right? The next thing that I also learned with was my aha moment, right? The moment that I realized that everything had clicked was when I discovered the power of intraday time frames, like the 30 minutes, the 15 minutes, and the 5-minute time frame, right? This was the very moment that everything that I have learned, from market structure to demand and supply zones to liquidity, clicked, right? So what do I mean by that, right? So in here, I was telling you that the H1 and the 15-minute was sharing the same structural level, right? So in here, we can see that price was making lower highs and lower lows, okay? So in here, you realize that when price came here, it got close to this low over here. I know that people will be looking at trades in here, but I didn't. Why? Because I understand that price is approaching a low over here, which is a target liquidity, is a liquidity pool, right? So regardless of the fact that the Asian low has been taken or whatsoever, on the 1-minute time frame, I didn't even go there to go and look for buys to the upside. No, I didn't, because I know that first of all, internally we are bearish with this lower highs and lower lows. I personally had some sales from here, okay? So I knew that we were bearish and price had just retraced and coming from a supply zone up here, okay? So there was no need to look for buys close to a major target liquidity, which is this one here, right? Because I understand that. But immediately this low got taken out right here, right? I understand also that there is a potential to look for counter trend trades right in here to the upside. Okay, and then if price gets into this level, I can look for sales, but we can see that price didn't tap into it. I had that push until this buys came in. Then I know that I am within internal structure, right? I don't rush because I know that I was still looking for a proper buys within these ranges to target this highs over here, and then further to an H4 supply, which was up here, right? And that was exactly where price came to. Yeah, it was this zone over here, and that was exactly where price came to. Okay, so understanding these intraday time frames, especially when you can link their build up to the H4 and the daily, you are going to do massively well, right? So the last but not the least thing that I also did was putting all these things together into a trading system, into developing a trading system, a solid trading system. As a trader, you need to have a profitable trading system. Keep on refining it, right? You don't just wake up, go onto the charts, and then you start buying or selling. No, you need to have a procedure like that you're going to follow. Okay, when I see the 4 hour make a push to the upside, I am going to wait for price to retrace to certain levels, maybe 50% of the whole swing leg. Then I'm going to wait for 5 minutes to do a change of character or change of intent. Then I'm going to enter. You have to have that system in place, right? So that was the last but not the least thing that I did. And then the last thing that I did, this is very, very important. The last thing that I did that gave me the confidence in my trading system, that gave me the confidence to be taking certain trades that I take. Like for instance, this one here, I took this trade yesterday. It was a 1:22, I think so. But then at 1:20, I closed like 95% of my volume. Imagine that you are in this trade and it pulls up to somewhere 1:18 and it retraces. I mean, you get headache. But I was still quiet because I knew what I was looking at, right? And all these things was something that I built up in the last tip that I'm going to show you, which is backtesting, performing end of day markups, and journaling, right? You need to backtest the system that you have developed, right? Find out, okay, you said you're going to wait for a break of structure, and then you're going to mark your demand and supply zones, and you're going to wait for price to retrace into that zone. And then when that price retrace into those zones, you're going to look for this, you're going to look for that. If all these things meet your criteria, you're going to take the trade. You need to backtest. You need to backtest all those stuffs that you have listed in your system, right? And where you need to make a refinement, you do that, right? And end of day markups is when the day is over, you can come onto the chart and begin to find out, okay, which were the possible trades that I could have taken, right? And then you take a screenshot, you save it in maybe your software that you use for journaling. Personally, I use Notion and my Telegram page for my journaling. I'm going to show that on the screens, right? So you journal all those things. Journaling gives you confidence, letting you know that I've seen my system play out is such that if you take 20 setups, my system has played out with like maybe 15 of them winning and 5 of them losing, and those 15 were giving me an average of, let's say, 1:5. You are profitable, right? So do that and make sure you put in a lot of time. And this is what I want to say for the last time, that these things take time. It is not an overnight job. You're not going to see these results overnight, but give yourself time. Myself, I put in like 4 to 5 months learning how to trade market structure, learning how to read market structure, right? So you need to do that and know that it won't come in a day, but gradually it's going to build up, and you're going to see yourself being a better trader, right? So this is where I am going to end today's video. I just want to hit up on the tips that I gave you, right? First off, you need to choose just one pair, and make sure you're just looking at that pair and nothing else. Secondly, you need to understand how to read market structure. You need to learn to read market structure, right? Learn how to tell the bigger picture story, and then learn how to read the smaller time frames and how they complement the bigger picture story, right? Or the bigger picture narrative. And then the next thing that you're supposed to also do is to learn how to map demand and supply zones, right? And then also you need to learn how to read liquidity, advanced liquidity concept, and learn to incorporate them into this market structure and demand supply zones that you have learned, right? And then find out how to read the intraday time frames, like the 30 minutes, like the 15 minutes, like the 5 minute time frames. You learn how to read them, and then you put up a solid trading system from all these things that you have learned over time, right? And then the last thing will be to backtest, perform or do end of day markups, and generalize your trades, right? So this is where I'm going to end today's video. If you found value in today's video, give this video a thumbs up, and don't forget to subscribe to the channel if you are not subscribed to it already, right? So see you guys in the next video.